Hey guys, the other day I did a video warning that de-dollarization could be coming. Today we got news that France cut a deal to buy 65,000 tons of natural gas from China denominated in yuan. This is a big deal. 6 weeks ago it was just pariah nations like Iran or Russia trying to de-dollarize their trade. Last week it was Brazil, now it's France. So what happens next? What if the US dollar is about to be dethroned as the world's reserve currency? De-dollarization means foreigners don't need as many dollars. This means there are extra dollars nobody wants. This makes the price of the dollar fall. It gets weaker. That's usually slow at first, and then it picks up speed if it keeps going, a progressive rush for the exits. Note, we Americans are obligated to use the US dollar thanks to an obscure law passed in 1862 as a wartime emergency that somehow managed to survive for 151 years now. So Americans have no choice. Unless you have gold or Bitcoin, you go down with that ship. Now, a falling dollar drives up the price of everything that comes into America, but it also drives up the price of anything traded on world markets. So that's the raw materials, the imported components that drive American factories and sustain American consumers. First to jump would be gasoline, heating fuel, food prices. All of these are world markets. They're very liquid. Along with prescription drugs, since China has a creeping stranglehold thanks to our idiotic overregulation. Indeed, this is more or less true for every consumer product that China dominates. We shot ourselves in the foot. Now it's coming back to bite us. Next, those jumps in trading commodities and input prices pour out through the supply chains. They yank up prices in industry after industry. So cars, construction materials like steel or concrete, clothes, furniture, TVs, computers, medical devices. Gone are the days of affordable luxuries. Now you got to work for it. And that's when the main event begins, capital flows. If foreigners get nervous, they sell not only dollars, they sell assets denominated in dollars. Starting with the most liquid, stocks, bonds, treasuries. These are very easy to trade. IBM stock takes you about a minute to trade compared to a Taiwanese factory in Wisconsin. So the liquid assets go first. Now, about 40% of American stocks are owned by foreigners and 1/3 of corporate bonds. If foreigners start fleeing, both plunge. This could cut your 401k almost in half. It could drive up borrowing costs for companies to impossible levels. That would lead to mass bankruptcies on top of the wave of bankruptcies the Fed is already engineering to try and stop the inflation it started. It doesn't stop there. 1/3 of US treasuries are owned by foreigners. That's over $8 trillion in bonds. If foreigners start dumping those, it will either send US government debt service soaring by potentially hundreds of billions of dollars a year. That all has to be deficit funded. Or, much more likely, the Fed simply steps in and replaces all of that foreign demand, which would flip inflation overnight back to the march into double digits. Losing reserve currency status would savage the American economy. It would savage the American people. No country needs reserve currency status. After all, it doesn't benefit the people. But like climbing a cliffside with no gear, once you go halfway, you better not let go. All right, we'll be watching this. See you next time.